Hello, accounting students. In today's lesson, we're going to learn about the balance sheet. This first part is a quick PowerPoint on the theory behind the balance sheet. And then in the next video, we're going to talk about how to actually complete the balance sheet. So I'll show you, I'll give you some guided practice on how to actually do that. So to start things off, we're going to talk a little bit about kind of the balance sheet and its purpose. Essentially, as the PowerPoint says, the balance sheet is a statement showing the financial position of a person, business, or organization. And what's important to understand is that this position exists only at a given point in time. One of the things that we're going to learn about the different financial statements is they cover either a period of time or are good only at a particular point in time. And we'll talk about why that kind of happens and what that means. And so going forward then, we're going to talk a little bit about the different formats and layouts and stuff like that. We're going to give kind of a very basic, sort of simple one in this lesson. But it's important to understand that in as much as we try to maintain a lot of standards in the accounting industry, the reality is the actual outcome or formats often can vary quite a bit. And the formats may vary quite a bit. But the purposes do not, whether it's to communicate income or, statement of financial position or whatever, that does not vary. So please don't take anything you learn here as to be written in stone. You can go to different classes and hear different versions from different teachers, and certainly different workplaces have different standards as well. So just try to kind of roll with the changes and recognize that that's the purpose that's important. So we call it the balance sheet for a reason, and this is going back again to our fundamental accounting equation. This idea of assets being equal to liabilities and owner's equity is absolutely critical to understanding accounting, and we're going to see it as a reoccurring theme all semester. And so when you see it in a minute, you're going to notice right away that we're balancing the left side of the equation with the right side of the equation. The left side of the balance sheet has the assets. The right sheet has the liability. Right side has the liabilities and owner's equity, just like we did with our statement of financial position from last lesson. So in terms of the parts, you're going to see at the top a 3-line heading, the name of the company, what kind of sheet we're working with or document, and the time period or date at which it's being prepared. We will then see all the assets listed in order of liquidity on the left. Very important concept to understand, this idea of liquidity. Liquidity refers to how easy a thing is to convert to cash. So typically speaking, we will always list cash or money first because it already is cash. And then we go down through the list of things that the company owns, and the harder and harder they get to being convertible to cash, the farther down the list you'll see them. So things like inventory, which are easy to convert to cash, are listed near the top. Things like buildings and land and specialized equipment will be listed near the end. There is some subjectivity to this. Sometimes you have to make an educated decision about it, but we'll have a chance to practice that. We will then list the liabilities on the top right-hand side, and they are typically listed in order of which they will be repaid. So things that are being repaid more sooner, such as bills that we have to pay, they'll be listed at the top. Loans would come next, and then mortgages, which typically are over 10, 15, 25 years, they're paid last. We will have to make sure that we list the financial details about each item, and another thing that is important is that the final totals of the two sides are always listed on the same line. Always, always, always. All right, so here is a fairly simple balance sheet. So again, going back to what we just talked about, we have our header at the top. So we have the name of the business, we have the name of the document, and then the date. You'll see these kind of little dash thing here a lot in the examples. It's just so that they don't become dated too quickly. Whenever you see that, just put in the year 16, so 2016 in this case, unless you're given instructions otherwise. So again, here we have a few things. So we have our assets listed here. Again, cash, accounts receivable, so that's money that people owe us, is easily converted to cash. Supplies is the next. And so again, these things are listed in order of liquidity. Now we're going to talk about accounts receivable and payable in a minute, but you'll notice that within each of these is like kind of a sub list. They are listed in alphabetical order by last name or business name. So you got your T, then your W over here, what we owe, the CGP. So that's in alphabetical order that way. Okay. Now, one thing I just want to touch on briefly, we're going to be doing a lot of this work using sheets. So we won't be using columnar paper like this normally, but it's important to understand how it works. So in this case, this first column is the cents column. So from 0 to 99 cents would go in here. You can alternatively put a dash in instead of the zeros, but not both. Then this is your single dollars, your tens of dollars, your hundreds of dollars, and then typically you will have all the rest of the numbers. So even if it's like 100 billion in this last column, all those numbers would appear here. We don't use numbers that big. Usually it's in the hundreds of thousands. Now, the other thing you'll notice is in this one is that we don't put a dollar sign before every number. This is one convention that some people use, where the first and the last number or a number in a total that gets a dollar sign, the rest of it is kind of assumed. In this class, we won't be using dollar signs in our sheets at all. We will just be leaving them blank. And then again, noticing that our total assets down here is on the same line as our total liabilities, owner's equity. Again, showing that the left half is balanced with the right half. We have the same number. Okay. Going forward then, so it kind of tells you how this is a claim of the creditors. So money that we owe money to is the total here. Money that is in a way owed to the owner is listed here, or the investment or net worth of the owner. And this is the total of all the stuff that this business owns. In our class, we're going to be, these headings are kind of left justified and underlined. We're going to be bolding and centering them. So it's going to be assets, liabilities, and owner's equity are going to be centered and bolded. The other thing you'll notice is we've got some underlines going on. And I think I mentioned this in class. Whenever we get to the bottom of a list, we're going to make sure that there's a bold underline to show that we're at the end of the list before the calculations are done. And then there's at the very, very end to show that everything's done. We're going to put a double underline to show that that's the end of the work. Okay. So again, going over here, we have a single underline to show that we're done a list, and we're going to do some math. Down here again, we're in this case we're adding the 14,000 and the 34,000. So we've got an underline there to show that we're going to do some math. There's the answer, and then there's the double underline to finish up. So we're going to be covering a lot of this when we do the actual guided practice. So you'll see a hands-on version of this, not to worry. Okay, so a couple of key terms: accounts receivable and payable. So accounts receivable is money that we will receive in the future. The short form can be used. Accounts receivable is for it is A/R. We don't normally use a lot of short forms in accounting, but there are a few kind of accepted conventions. So again, receivable, what it is right in the name. We're going to receive this in the future, and it is listed as an asset. Accounts payable, on the other hand, are bills that we owe to people. And so again, this can be listed as A/P, and we will be paying it in the future. Both of these, as I mentioned before, are listed alphabetically. Now, going back to this very briefly, this is kind of one way that you can list the accounts receivable and payable. So here we have kind of almost like a subheading, and then you'll notice the spacing here with the dash, and then the names, same thing here, subheading, spacing here, whether it's 3 spaces or 5 spaces, it's up to you. And then, but it should be consistent. And then the company's listed next, okay? And again, in alphabetical order. So we talked a little bit about the columnar paper, so I'm not going to go to that. We talked about the ruled lines. Again, neatness and spelling are absolutely critical in accounting. Usually we are doing this for other people, for clients, for our company, for outside users. So we want to make sure that we're putting forward the best possible example of our work.